Well, good morning, everyone, and welcome to the Pork Checkoff webinar. My name is Bob Ruth, a producer from Pennsylvania and a member of the National Pork Board. As many of you already know, U.S. pork exports have grown significantly since 2010, rising more than 50% in volume and over 60% in value. This increase has historically been attributed to price, consistency, and safety of the U.S. pork supply. Producers continue to prioritize checkoff investment in strengthening the position of U.S. pork globally, and the National Pork Board strategically engages with partners to differentiate and add value to product in these markets. For today's webinar, as a reminder, this webinar is being recorded for the purpose of sharing with producers who are not able to attend. You will be muted throughout the duration of this webinar, and all questions can be submitted via chat to be answered once our speakers have concluded. Next slide, please. Today, we're very fortunate to have an excellent panel who will speak on the National Pork Board's international marketing strategy, the 2021 year-end export data, and the 2022 outlook. The panel consists of Brett Stuart with Global AgriTrends, Dr. Clay Eastwood from the National Pork Board, Courtney Knupp from the National Pork Board, and Dr. Steve Myers from Partners for Production Agriculture. Next slide, please. This is our antitrust statement. All the work the National Pork Board does complies with the Sherman Act. I'm not going to read the statement to you, but the best rule is if you have a question whether a certain matter can be discussed, clear it with an attorney. Next slide, please. This is finally our National Pork Board disclaimer. Pork checkoff funds are being used to host this webinar with the purpose of helping our pork producers understand publicly provided information. The views expressed by our guest speakers are theirs and not of the National Pork Board. Next slide, please. At the end of this webinar, our speakers will be taking questions. Please submit your questions via the question and answer function at the bottom of your screen. And now, let's get on with the program. I'd like to turn the program over to Brett to give us an overview of pork trade and his outlook for 2022. Brett, thanks for being with us.
Thank you, Bob. Great to be with everyone today. I'm excited to go through this. It's been fun to dig through the year-end numbers. We just got the December trade data, U.S. official trade data, and to be able to dig through these numbers and take a look at things. I look back over the year and the frustration and the challenges, whether it be COVID, logistical issues, port issues, tight container supplies, fill in the blank. I mean, it was absolutely a harrowing year in a lot of ways, but you just don't see that in the data. The data shows a great year. And I look at what NPB does and your efforts, it's significant. I used to work for the U.S. Meat Export Federation, and what a great partner. Those overseas offices and staff are incredible at being able to really help you as producers promote in some very diverse market conditions. Go ahead to the next slide. I popped this in. This is a picture of some Japanese tonkatsu. And so that's what we do with our incredibly affordable pork loins here in the US. We send them to Japan. They bread them, deep fry them, and turn them into just delicious awesomeness. It is really fantastic what they can do. So let's flip on through here. Next slide. Just a few of the highlights. We had a record value of pork and pork variety meat exports, $7.8 billion, up 6%, which is incredible. Just incredible, especially when we consider the slowdown to China. Record tonnage to Mexico, up 27%. Another incredible number. Record value to Mexico. We're now shipping $1.6 billion of pork to Mexico. And if you take the total export dollars divided by our slaughter, it works out to be $61 a hog. And so you think about that, every hog you sell, $61 of value is derived overseas, and that's a wholesale value. pretty incredible numbers, especially like I said, considering the year we just went through. Go ahead to the next slide. I love this chart. I look at this and just scratch my head. I remember in 2003, I went to work for U.S. Meat Export Federation with the job as their economist to forecast pork exports. And I remember digging through that first year and really trying to understand the Japanese market and the Korean market and how all these markets work. And we were about $1.2 billion that year. We're now at 7.8. It is incredible what has happened in a very relatively short amount of time there. And the line just goes up. I think this is a great credit to what we do in terms of productivity and making our pork affordable and promoting it, and the efforts made by so many around the world. You can see the decline in tonnage. And that's the only disappointing number, is we were down about 3% in tonnage. Not a surprise when we consider what happened in China, but you run a trend line through this and you say, okay, what does the next 5 years, 10 years look like? And I think it's going to be exciting to see what we do in 10 years. I'm going to close today with some 10-year thoughts. And I think there's a great future ahead. Next slide. So here's our exports by market in terms of billion US dollars. That's where we got to that 7.8 billion. You can see there China, pretty big drop. China liquidated their herd. They began in January 2021. And through the course of 12 months, Chinese hog prices fell by 66%. And that was due initially to some disease liquidation. Then prices fell so low, they fell below break even. And so Chinese hog farmers have now been losing money for most of 7 months. And so that big inflation in China, that 200% hog price increase, record profits for an extended period of time, drove them to overproduce. And that's what turned China south. But look at Mexico. You can look at the China and Mexico lines, almost mirror images of each other. Mexico stepped in and bought a lot of US pork, mainly hams last year. Japan grew a little bit. Canada grew a little bit. Pretty much everyone grew a little bit. Australia would be the lone decliner into 2021. But really a good year when I consider what we were going through, the rapid price inflation, and really strong domestic demand at home. Sometimes that limits our exports when we have really good demand at home. Last year it didn't. We had good demand at home. We had good demand abroad. Just a great year. Next slide. So here it is just by tonnage and by category. And of course, most of our pork is exported frozen, with the exception of Mexico and Japan. Mexico and Japan are the vast majority of our chilled, and not all of our pork going to Japan goes chilled, but some of it does. And there you can see across the board, the decline in the China business led to a decline in frozen, more chilled. Offal exports increased in tonnage, prepared preserved pork, cured pork, small pieces, but that just gives you a look by category. Next slide. So now let's shift over. That was kind of the nutshell review. A great year. What do we see going into 2022? 2 words: uncertainty and volatility. And it becomes difficult to look into the crystal ball and say, what's this year going to bring? We've have continued logistical issues. We have domestic conditions with Prop 12. We've got a lot of things going on. I have some good expectations for China this next year. So let's click and take a look. Go ahead and click down on these. So here's some key assumptions. I think that we're going to see COVID impacts fade quickly into 2022 due to a higher global immunity. That Omicron variant went so quickly around the world, and higher vax rates. And we're seeing that in the data. Case counts are falling sharply across the US and across the world. I think COVID will be here for years and be a factor, but I think the impact of disrupting logistics, disrupting plants, the big disruption in restaurants, I think that's going to fade quickly. Next point, reduce global sow herd. We're starting 2022 with fewer global sows than a year before. And I wish I knew the number, but unfortunately, no one on earth knows how many pigs or sows there are in China. And maybe not even in the US. We have a little better view of it. But we look around the world, fewer sows in China, fewer sows in the US, fewer sows in Europe. and you add this up and say, we're setting up for a good profitable year by maintaining these supplies at tighter levels. I think what we're going to see is those tight supplies lead to higher prices. I think we've lit the fuse a little bit in the US. We've seen what the futures have done. We've seen the cutout moving higher. We're really at a pretty good spot for sitting here in February based on our pricing. But those tightening prices could give us more profitability, or tightening supplies could give us better price action through the year. I think the US is the first one to see this. I think by mid-year, we're going to start to see those China prices, maybe even by May, June, see them start to shift higher. Europe will probably shift higher once China does, based on that demand. Next one, Mexico to remain a solid growth market. I follow the Mexican hog prices. That still shows that the math works. Even with ham prices going up, we've seen a lot of volatility lately in the ham market. But I think Mexico is going to be a solid growth market next year. Next slide. The below the top 8 export markets. I want to show you a slide on that as we go through as well. And then here's the key assumption, and it's not just an assumption. You can click the next one. It's also a hope, a prayer, a plea. My key assumption is we do not have African swine fever in North America. And if that were to happen, absolutely, that's going to be a game changer on exports and how things work, depending on who gets it. If it were to hit the US, our export markets would close instantly. If it were to hit Canada, their export markets would close, and those foreign buyers would buy more from the US. And so depending on what happens, again, hopefully nothing. Hopefully we have another great year disease-free from African swine fever. Next slide. So let's talk about China. Again, I said, no, my big asterisk here is no one on earth knows how much pork or how many pigs there are in China. But this is the USDA numbers through 2018, and then it's my estimates beyond 2018. Before ASF, China produced about 55 million tons of pork and imported 1.5 to 2 million tons a year. You can see the huge volatility. 2021, I think the reason that production rose was because of oversupply. But still, look at 2021, they imported, it actually turned out to be about 4.5 million tons of pork. 2022, I think their production's going to shrink just because they've been liquidating. I think imports are going to be back around 5 million tons into China from all suppliers. I think the US might be down a little bit based on the heavy flows in the first half of this year and last year, and the slow flows in the first half of this year. But I think China could be a 5 million ton market. So click again, here's the big question mark. Who knows what's going to happen next? I think the huge investment into the high-rise hog hotels, I think that will prove to be a mistake. I think the disease issues, whether it's ASF or PRRS or PED or pseudo-rabies or fill in the blank, I think is going to be very, very difficult to manage in some of those new farms. I think there's still ASF, that's still going to disrupt in China. So I think it's going to be a roller coaster. But the bottom line, look at those import numbers now from what they were before African swine fever. I think China is going to import 4 to 5 million tons of pork a year into perpetuity. And that still gives them a 90% self-sufficiency rating. Next slide. Here's my forecast. So this is US pork exports to China, Hong Kong. The blue line is 2021. You can see what happened. Now 2020, we all remember that, when we were shipping 250 million pounds a month. But 2021 came and ASF liquidation began in January, and those Chinese prices started to slide. By June, Chinese hog prices were below break even, and that's when liquidation ensued. And so 2021 was pretty disappointing. And look at 2022, that green dotted line, that's my forecast. And I'm saying, you know what, by May, June, I think we start to see an increase in Chinese hog prices, maybe June, July. There's about a 3-4 month lag time between prices rising and imports rising. And so I think into Q3, Q4, we could see some better action to China this year. Now, I don't think we're going to blow the roof off, but I think we are going to get some shipments going in the back half of this year. Next slide. So here's my pork export forecast numbers for 2022. And you can see China, Hong Kong right there. That's the big roller coaster. You can see the big drop in 2021 and the subsequent increase to Mexico. Most of my markets are fairly steady. I think we can ship a little more to Korea, more to Colombia, but look at the others line. If there's one growth market on that chart, well, there's two really good growth markets, and one's Mexico. Look at the trajectory. And now look at others. And I want to talk a little bit about others. Here's one of my others markets that I'm watching. Go ahead and click. This is the next others market. If you recall, about 15 years ago, we signed the CAFTA-DR agreement, Central American Free Trade Agreement, which was a group of these countries. We then signed a Panama FTA, and we signed FTAs with Chile and Colombia. What that means, most of those CAFTA countries had 15-year phase outs on their tariff rate quotas. We signed them in 2005, 15-year phase outs. What happened in 2021? We went quota free. Quotas came off. So we are now duty free into all of these countries. And if there's one thing I can tell you, look around the world and show, you can see what happens. Take a look at what happens when we have access tariff free and quota free. When we don't have quotas and tariffs, we export a lot of pork. And so you look at these countries here, they have a combined population of 128 million this year. Mexico's 130. And so you could probably back up, if we backed up Mexican per capita income 10, 15 years and say, what we have just south of us here is potentially another Mexican growth market. And I think we may hit $1 billion to this group by 2022. And so when you say, what are our growth markets? Here's one that hasn't gained much attention that I think is significant. And we'll see, we're going to have higher priced pork this year. That may make it a little tougher, but I think the trajectory on this chart is going to look similar to Mexico. Next slide. Let me wrap it up with a few slides here. So me being the data nerd that I am, I download a lot of data. And one day I was playing around and I downloaded global meat and poultry consumption world totals by year. And I said, hey, we've also got GDP by year. I wonder how per capita income relates to consumption. And so I just scatter plotted it. And so here you can see the correlation. Now each dot is a year, and that's 49 years of data with a 0.99 R square. A 1 would be perfect correlation. So these two data points are very closely correlated. So flip the next slide. Where this gets interesting, we have GDP forecasts. The World Bank and IMF forecast world GDP for 10 years. Now you can see some disruption there in meat and poultry. That last dot, that was China's ASF. But if I run that and say, I've got basically a 50-year model that's a 0.99 R squared. If that continues 10 years and those GDP forecasts are right, click again, it tells us that $37 billion more in GDP globally generates demand for 78 million tons more meat and poultry. That's a 37% increase in 10 years. In the last 10 years, we added about 58 million tons. The next 10, we need 78. What does that tell you? Gear up for growth, right? Flip to the next slide. I did this same math for just pork alone. And for pork alone, you can see the model there and the actuals. And because of China depopulating their herd in 2020, it kind of puts a weird blip in that. But here's what the model would have predicted, and those are the actuals in global pork demand based on one variable, GDP. Go ahead and click. You can see here that model of correlation suggests that we're going to need 23 million tons more global pork in the next 10 years. Click again. It uses those IMF World Bank forecasts. So if they're wrong, this is wrong. But it's a 50-year correlation. And then the next one. So that's my chart. The red bars are my consumption estimates based on GDP. So I've done this by species. So what that tells us is what I said before. We're going to need 23 million tons more pork in the next 10 years. The United Nations has a group, the Food and Ag Organization, and they put out GDP forecast, or they put out production forecasts. So in the next 10 years, the United Nations says, we think world pork production is going to grow 14 million tons, poultry 23 and beef 4. So that's their production forecast against my consumption forecast. And honestly, I can't wait till 2030 to look back and see how this played out. Because what I'm using, like I said, I'm using a 50-year model with a 0.99 correlation. And so if we continue to see rising income, the world's going to need more pork, beef, and poultry to a shocking level. And so I guess if said another way, I'm predicting against the FAO forecast that FAO forecast is going to be 9 million tons short of pork the next 10 years. Now, that doesn't mean the line goes up like a rocket. That means it goes up and down and up and down and up and down, but ends up. And so I would just say, you may not be gearing up for growth right now, but you better have a 10-year plan that involves some growth. With that, go ahead to the next slide. I'll wrap it up and I will introduce Dr. Clay Eastwood from the National Pork Board, who is going to go through the NPB export strategies.
Thank you, Brett, and good to be here with all of you today. I want to switch gears a little bit and talk about what the Pork Checkoff specifically is doing and what our strategy on the international market development side looks like. Next slide, please. So we started out a few years ago and really started to look at gleaning some insights through a market assessment lens. And starting back in 2018, at a time when African swine fever was really starting to impact global protein trade and specifically pork trade, we started these market assessments, the first one being in China, now since we've done one in Vietnam and the Philippines. And these insights have been incredibly timely and shed a lot of light on what we've really coined as our diversification strategy for our export portfolio. So you just heard Brett talk about how China has declined, and we know that we can't put all our stake in one individual market. And so we've really been focused on trying to make sure that we've got that diverse portfolio of export markets for U.S. pork going forward. So as we look at these market assessments, all of which are available on porkcheckoff.org for download, these have been really timely and really incredible tools for not only the industry, packers, exporters, but USMEF as well. Next slide, please, Nate. One of the things that we did just last year in 2021, what we called the U.S. Pork Differentiation Study. So we looked at 6 of our key markets listed there and really tried to look at what it is that, you know, as we think about how we differentiate U.S. pork from some of our key competitors. So the Canadians, the Europeans, how do we really try to set U.S. pork apart? Some of the key themes that came out of this research were sustainability, communication, and then also quality, consistency, and service. And so as we look at this list, there are a lot of key areas where producers play a really big role in this. And so I just highlight that sustainability is something that's absolutely relevant and important to the domestic market, but it is in fact very important in some of our key international markets and increasingly so going forward. So as we look at, you know, going forward from an international market development standpoint, we couldn't do what we do without some of our really key partnerships. Those being, you heard Brett mention the U.S. Meat Export Federation, which is really our feet on the street in international markets, but also our partners at the National Pork Producers Council and also at USDA's Foreign Agricultural Service and some of the additional funding we've been able to leverage through there. So with that, I will actually turn it over to Courtney to talk a little more in depth about partnerships and some of our strategy initiatives.
Thank you, Clay. My name is Courtney Knupp, and I'm the Vice President of International Marketing Development for the National Pork Board. Next slide, Nate. And I just want to echo what Clay mentioned. Our partnerships are key to the success that we have in promoting pork and pork products in our international markets and striving to create as much value as possible for every part of the pig that we sell in our key markets. To lift up our partnership with the U.S. Meat Export Federation, for those that may not be as familiar, USMEF leverages their global staff, Clay said, feet on the street, boots on the ground. They build connections, they foster relationships to ultimately increase our U.S. pork exports. They're a key partner Our goal is to position U.S. pork as safe, consistent, and high quality. And our key market strategies that we work to develop our strategies and tactics are really aimed at developing, defending, and displacing competition to grow our market share and our market value. USMEF receives matching funds from the U.S. Department of Agriculture that helps to further leverage the investment made by Pork Checkoff on behalf of our producers. Next slide, please. We really want to focus in 2022 on diversifying the international portfolio, which has been mentioned a couple times. We saw great success in the past years, especially 2021, and we look to do so, continue focusing on that in 2022, both for markets and for cuts. We do this in a couple of key ways. We secure core markets where pork demand is high but has room to grow. We expand business in developing markets, including both increasing volume and variety of exports, and discovering new business in emerging markets by executing marketing strategies, capitalizing on those localized preference and needs. A few initiatives that yielded great value in 2021 that we want to continue working on would be, engaging with USDA on programs such as the quality samples programs, where we were able to strategically promote the loin in Mexico, and continuing to have a strong presence in product showcases in key markets, specifically in Latin America and the ASEAN region. These are great opportunities to connect buyers and sellers for new business and to grow and diversify existing business and foster those relationships. Next slide. Most importantly, for our producers, what are some things that you could be doing? And we have two key actions that we ask of our U.S. pork producers. The first is that you can request a free on-farm sustainability report. These reports help to measure and document producers' continuous improvement efforts. National aggregate data from these reports can be shared with international customers to demonstrate U.S. pork producers' commitment to sustainability. And the second is to create an AgView account. AgView is a free opt-in technology solution. It promotes business continuity for America's pig farmers by making disease feedback and pig movement data available to animal health officials on day one of a foreign animal disease outbreak. Rapidly containing or regionalizing a foreign animal disease outbreak, such as African swine fever, could help protect America's ability to work with trading partners to maintain these exports, which are very high value and crucial to our business and strategy here at the National Pork Board. On the topic of sustainability, which Clay mentioned, I do want to take a quick moment to promote that next week, AgriPulse is partnering with the National Pork Board to host a free webinar titled Creating the Path for More Sustainable Pork. And this webinar will be next Thursday, February 17th at 11 a.m. Central Time. During this 1-hour program, information is going to be shared on how pork producers are demonstrating their commitment to sustainability. This is a key topic for the U.S. pork industry, one that has great implication both domestically and internationally for the brand of U.S. pork. And we really look forward to this. By registering for today's event, you're actually going to automatically be getting an email from the National Pork Board with information on how to register. With that, if you have any questions about our National Pork Board's international market development strategy and how we plan to diversify, we're always available for questions on this webinar or in other forums, so don't hesitate to reach out. With that, I do want to turn it over to a friendly face to the industry, Dr. Steve Meyer, who's going to be providing us with a market update. So Steve, over to you.
Good morning. By 1 minute, it's good to be with you, and let's talk about, I'm going to presume, unless somebody comes on here and tells me different, that you can hear me. Let's get right into this. If you'll click on that next. And number one is I do work for Partners for Production Agriculture. We're an introducing broker for FC Stone. As such, we advise clients on risk management and marketing decisions. And we're required to tell you that those instruments, futures and options and other instruments are risky. And that's what this thing is all about. As my boss always points out, this really says that if you trade anything I say here today and lose money, it's your fault, not mine. Okay, let's go to the next one. Key issues for hog and pork markets. If you just flip through these as we go here. Number one at the top of the list, mainly because the magnitude it could have, would be African swine fever. Brett talked about that just a little bit. Of course, it's in Dominican Republic, Haiti. It's still a big risk. The whole situation with Italy is quite interesting, but not so much because it impacts markets, but because those wild boar cases in Italy were 500 miles or 800 kilometers or something like that from the nearest ones in Germany. And it kind of goes to show how tough this thing is to control. Italy is not a major player in world pork markets. Obviously, there's a lot of shuffling of the supply in the EU should something happen like this. Germany being the best case of that when they were blocked from China, and Spain basically took over that business. But it still is one of great interest. Now, the United States has not taken any action on this because it's only been found in wild boars. It'll be interesting to see what we do if it is found in commercial hogs. Of course, we've regionalized Poland in the past, and a lot of that is, number one, is because that's the right thing to do, and number two is that's the way we'd want to be treated should this ever come to our shores. But that's an issue just because of the magnitude of the impact. The next one is this domestic consumer level demand. It remains strong. Wholesale and hog demands waned in the fourth quarter, but they are recovering quite nicely right now. And so we'll talk about demand. Next one, please. Production costs, high and climbing again. This is a change in a new paradigm. I remember before, a few years ago, nobody ever heard of what a paradigm was, and now we use it all the time. Well, this looks to be a new one. We'll talk about that in a minute. Next one. Hog supplies. Of course, we always focus on hog supplies. They're lower year over year. I still think the productivity situation can return to us and cause growth, even in the second half of this year. We'll talk about that next. Operational packing capacity, big deal. We lost some capacity last year when a court decision slowed down some of our plants. And then we've had issues with helpers. I mean, obviously, labor situations during January caused some slowdowns at plants. That was a difficult situation. It's better now, but we're probably going to deal with that at some time periods in the future as well. Next one, please. Okay, let's talk about costs. And this is my model based on the Iowa State University cost and return series. These data represent, in my opinion, and I don't think Lee Schultz, the author of these, would argue with me much, represent really the low-cost 25% of producers out there. The average producer right now is probably $5 to $7 higher than this. And you see that 2022, the forecast based on corn and soybean meal prices at the present time is now over $81. That number was about 75 back in November, and it just kept creeping up, mainly as corn went up, but bean meal has gone up much higher than we thought. The real message here is that this isn't going to get any better anytime soon, and it's driven primarily by tax credits and subsidies and requirements for diesel fuel and renewable diesel, and the pressure that's putting on oil supplies or fat supplies all over the world, and driving soybean oil prices to record highs. The crush is going to be driven by oil. We're building new plants with oil company money who want access to that soybean oil to make renewable diesel. And so soybeans are going to lead things higher, and the corn market's going to have to bid against soybeans for acres. The winner here is going to be probably the renewable diesel companies that make those and landowners. And we're moving to a paradigm, we used to be in the 50s back before 2007 and 8, and now we're in the 70s. We've been in the last 4 or 5 years. Where are we going to end up? The upper half of the 70s, I hope, is where we are. I'm afraid it might be higher, but I guess my message would be just expect this to continue. We think we'll get some respite from soybean meal prices as we go through 2022, mainly because the crushers are going to crush for the oil and they don't have a real good place to store soybean meal. But we have thought that all along, and meal has defied us so far. Next one, please. If we look at the hog supplies, of course, the December Hogs and Pigs report is our most recent count here in the United States by USDA. You can see 21 as a percentage of 20. Those numbers were all smaller than what analysts had thought they would say in the report. So it was judged bullish from the beginning. It pointed out somewhat lower stocks, especially of heavyweight hogs. Those hogs are 120 pounds and over. And so We thought that that would be bullish for the short term. We didn't see that much impact for the summer, and yet the entire futures market structure has gone up tremendously since then. I have some problems with some of their data. A breeding herd of 100% and farrowings in Sepnov of 95.2%, they don't seem to go together. Now, maybe they overstated the breeding herd, maybe they understated farrowings. We don't know that yet. That leads to a pig crop down 3.6%. We're going to be into those pigs sometime in March. The other thing that's confounding us a bit here is, remember I said a while ago there wasn't any fat in these diets? Well, these pigs are growing slower. And so our projections of time to market are probably not as good as they have been in the past, or not as accurate as they have been in the past. The last number I would highlight on this table is 101.3% on Sepnov pigs saved per litter. For the better part of a decade, we ran over 1% growth in litter size pretty consistently. And yet the last 2 years, we've grown it very little. And part of that was our own decisions of whether to keep weaned pigs or not. But we've certainly been flat on reproductive efficiency. This indicates that maybe we're moving back to that growth pattern. And we know we have the genetic capabilities in these breeding animals to grow litter sizes well beyond that 11.19 pigs saved per litter. And so I think this return to growth on productivity could enhance our supplies in the second half of 2022 and into 23. The next one, please. This is a picture of that same report. The gray is the range of the estimates. You can see the 120 to 179 inventory and the 180 and over, well below the bottom of the pre-report estimates. The same for the most recent quarter's farrowings. You can see the 101.3 down at the bottom, well above the top of the range of estimates. So it's just a picture of that same report. I think one that's quite useful in visualizing what's going on. Next one, please. When I put these together, we have slaughter. The smooth red line in this chart is our forecast for weekly slaughter for this year. You can see we're below year-ago levels through June, above year-ago levels from June all the way out. We kind of get into some slaughter capacity very close, and when we get in the fourth quarter, I wouldn't judge that as being real problematic. One point to make is we haven't been as high as what that line says so far. Now, these actual slaughter numbers have been really, since December 1st, have been really quite close to USDA's numbers. They've been below mine because I thought we were going to have more hogs to slaughter. And you can also see the problems we've run into with coronavirus issues in January that took some workers out and had some plants slow down. We had a weather problem last week that caused that one to be a little short. But I think we're going to get back toward this line here as we go through February and March and be very close to those as we go forward. Matter of fact, we could run above it. I still don't know how to judge this growth factor. If we go to the next one, I think we have weights here. Whoop, that's an incorrect one. Let's pop through it, please. I should add a different table there. Here you see weights. Producer sold weights have started down a bit. And you can see normally in January, producer sold weights decline, the 5-year average here. But look at the level of these. These hogs are as heavy as they were last January on the tail end of all of those backed up hogs. And you can see Packer-owned pigs, Packer-produced pigs are fully as heavy as they were last year. So I still think we may have some pigs that are backed up from the holidays here that are added weight, and they're going to have to come to market. We'll see. Packers have been chasing them pretty hard, which would indicate that there might not be as many out there, but still, these are pretty heavy hogs. The weights aren't coming down real quickly. Next one. Packer margins, there's been plenty of incentive to slaughter pigs in the last few weeks with these margins up about in the upper 50s on occasion. The point I would make about this chart is you can see the 5-year average on Packer margins. We're going to probably be above that for the foreseeable future. Packers' costs have gone up. This is a gross margin. The only thing paid for out of this is the pig. And so Packers still have to pay all labor, transportation, packaging, everything else out of that margin. And I think they're going to make sure with their bids based on what they're offering meat for and what they're bidding on hogs, that gross margin is going to be larger than it has been in the past. It's going to push a bigger wedge between the cutout value and hog prices than it has in the past. And it's really all driven by cost. The next one, please. Demand was the key in 21 and will be in the key this year. Domestic consumer level demand and export, and export demand are what drive wholesale pork demand. You can enhance either or both of those and help our demand situation dramatically. Export demand is driven by consumer demand in those importing countries and pork supplies in other exporting countries. And that's one of the things that we're never sure about, or in those importing countries as well, in the case of China. And Brett pointed out, well, nobody knows how many pigs are there. Wholesale demand drives hog demand subject to relative prices, i.e. margins, other costs and operational capacity, and then any non-capacity constraints that might be out there. If we look at the next one, we can look at what the exports have done. Brett talked about these in detail, so I'm not going to visit them very much. The next one is some expectations based on Brett's points. And again, he talked about those, so we're not going to go into those, but just to say that we expect exports to remain good this year. Maybe not quite as good as last year, but Brett has a little bit of growth, all dependent on China in the second half of the year. We think that's going to be an important part of demand going forward. If we look at the next one, we can see what kind of is the quantity component of demand. We use per capita availability. And I say availability, it's the amount of pork we have in the United States that doesn't get exported and doesn't end up in a freezer. All we know is that was made available. We produced it, and we can't account for where else it went. So availability / disappearance / consumption. And we say consumption, and I always point out something consumed it, whether it's a person, a pet, or a trash can, but it's gone. And these are the numbers that we look at. Now, that number was down 2% last year. It's going to be down another 1.7% this year on slightly lower slaughter, a little bit of population growth, and weight's about the same as a year ago. So down 1.7% on this number. Let's put this in historical context, though, on the next slide, and that you can see this same number all over time. Now, there's good and bad in this, but the good part is we've maintained our per capita consumption. If you look at the beef chart on this, it's gone down over time. Chicken has obviously gone up. The bad part is we've maintained our consumption over time, with the exception of those years in the post ethanol years of 2009, 10, 11, 12, 13, 14, and of course we had PEDV thrown in there. We've been really between 50 and 52 pounds for the better part of the last 40 years. It's going to be difficult to break out of that, but if we can stay in that and still have good prices, then that means demand is strong. And we look at the next one, and there's a retail price, and retail pork prices have been exceptional. They're record high. Some people would say, well, that's not good. Well, if you're selling a product, you want your prices to be high. And any business, one of their goals is to try to get their selling prices up by creating value in the mind of their customers. And so I think that's what the pork board and packers have done very well over the last few years, is create value and be able to push these prices up, which is one facet of strong demand. And we go to the next one, shows real per capita expenditures. It's really the combination of real prices, i.e. deflated prices, and per capita consumption. You can see the wild volatility in 2020 around coronavirus, but notice that the observations for 2021 were clearly record high. And if we go to the next one, you can see monthly data for each species. December came in stellar once again, up 8.7% from a year ago. For the year, pork demand up 5.1%, beef up 5%. Chicken didn't have nearly as good a year as pork and beef. And really the key there is what was going on with their retail prices. If we go to the next one, what about domestic demand this year? Well, I think it's going to be good. I mean, I've had my doubts about wholesale and hog demand in the fourth quarter, which were kind of leaning back toward pre-21 levels, but they have really rebounded very well in the last few weeks, and I think we're going to be good. Now, my concerns are, number one, inflation. Our prices being higher is not a real problem as long as we get the product sold. But when we have general inflation, then the cost of everything else goes up, and that leaves less money in consumers' pockets, and that could be an issue. Government payments, of course, last year and the year before were quite positive for incomes, and that's positive for demand. Will Congress renew those? Will there be any more government payments? We don't know. And I'm not taking a side one way or the other. I'm just telling you that it is a factor in incomes, and incomes impact demand. COVID, we benefited from this the first time in the change of behavior of people going from restaurants into grocery stores. Pork was one of the beneficiaries of that. What happens now? Will it be that big a deal from now on? I don't think it will, because we probably won't go through the kinds of shutdowns we did then, but still we have to pay attention to that. Taste, preferences, and habits, and that's the point about pork being a beneficiary. Wholesale and hog demands have fallen back, but have recovered some here. It looks like we're in pretty good shape on these. Let's go to the next slide. Here's a picture of demand over time, and this is the cutout value versus per capita availability. You can see that from 2002 to about 2013, most of the observations lie right along this lower line. One that's out of bounds to the north is 2004, and that was the year of the Atkins diet. So it's not a surprise to me that we had a positive kind of demand situation with much higher prices on not very much lower supplies from 2003. In 2014, of course, that was a PEDV year, and we had been cutting back production for some time anyway because of higher costs. And when we threw that in there, of course, that's very tight supplies over here, less than 46 pounds per person. And we ended up with very high prices. And apparently, we kind of got consumers in the habit of paying higher prices, because when we increased production, we didn't go back down to these old price relationships. 15, 16, 17, 18, 19, 20, and then 21 comes along. And it's completely off the charts. Way higher prices for not much less output than we had in 2020. Right now, we're looking at 22 being close to that. Just a few weeks ago, I had this 22 observation down toward the 2017 observation. The data recently has said that demand is continuing to improve. So those are positives as we look forward to this year. The next one shows our forecast for cutout value. You can see we have it peaking at about $110 or $11 there in the summertime. Actually, I'm going to guess that's going to get revised up here pretty quickly, given the strength of cutout value recently. I don't know why I've got the scatter diagram. Oh, this is hog prices. The same kind of relationship here. You just change the scale on the left-hand side. We go to the next one, shows our price forecast. And frankly, let's go down to the next one, please, table. You can see our forecast up in the 90s, bumping 100. We're well below where the futures are right now. And they're very optimistic. I think what that spells is pricing opportunities for producers. There's a lot of folks that think that they will still go higher. I would encourage any producers on this to talk with your marketing advisors and develop a strategy that's right for you. I don't know your situation, so I certainly can't tell you, but I can tell you that the futures market is higher than what I think cash markets will get to. If we get to the next one, we show national negotiated purchase prices peaking a little over $100. I think these could actually go higher in the summer if we have tight supplies and packers have to chase hogs in order to make their daily kill runs. Finally, a chart of profitability. The cost one in this one, if you go to the next one, is the same cost chart line you saw a while ago of the $80, $81 cost over here where the green is. With hog prices and hog futures on top of it. Right now, this is shaping up to be the second best year ever. Almost $30 profit. That number was down in the 15 range back in even in December. We've seen this big rally in hogs. So there are real opportunities out there for producers to manage their business quite profitably this coming year. Okay, the last slide. Key issues for the next 3 to 5 years. And if you'll just pop these up and I'll go ahead and pop them all up. Is $75 to $80 or more the new normal for production costs? I would argue that 75, 80 is certainly in the cards, and it could be more. Can we keep ASF or any other trade impacting disease out of the U.S.? My answer to that depends on the time period. If you ask the next 100 years, I'll say no. There's a lot of opportunities. If you say the next 2 years, I'll say yes. We have a great track record of this. There were people that predicted we'd have it within a year when China got it, and we haven't. We have more resources devoted to keeping it out. I think we have a very good chance of keeping it out of here. It's really important that we do, because it would be a massive impact should it come to our shores. Will domestic pork demand regain all or part of the 21 level? I made the argument just a moment ago. it's regained a pretty good chunk of it just in the last 5 to 6 weeks. I think it's possible that that'll happen. Will export markets provide growth opportunities? Brett made a great point about the other markets. The point to be made on that is that most of the low-hanging fruit, as far as big fruit, China, Mexico, not China, Mexico, Japan, others have been picked. Those smaller ones, though, when you put them together, they make a lot of difference. And going to a zero tariff, zero quota situation, because of those long-standing trade agreements, so hard fought for by your organizations, those really will provide us some opportunities. Will Prop 12 or Question 3 spur other states or cause them to think twice? These are going to have market impacts. And whether they cause a Me Too thing among other states, which there are some propositions being talked about, or whether other states look at the impacts and say, no, I don't think we want any of this, remains to be seen. Will packing labor constraint be solved? This is a tough one. We could use more people. That cries out for comprehensive immigration reform across our economy, not just for pork. We could use more productive people always. I think the answer generally is going to be more mechanization. We'll make the people we have more productive by putting them with capital in the form of mechanization. That's a long-term situation, though, because there aren't very many manufacturers of these machines. It won't happen very quickly. Physical capacity growth, we don't have many opportunities. There's a second shift that could go in at Prestige in Iowa. Coldwater, Michigan would have to build some coolers. Holstone is still remodeling their plant in Fremont, Nebraska. We understand it could do us a double shift in 2023. And then, of course, Holstone has purchased land for a new plant in Sioux Falls, South Dakota. But that's several years in the offing. All of them are completely dependent on labor availability. The most obvious possibility for increasing capacity in the short run is getting those plants that were running at higher speeds prior to July 1 last year back up to those higher speeds. There are several in the process of applying for waivers on those at the present time. We still haven't had a decision on that. So that's the most immediate increase in capacity we can find. A solution for pig survivability in general and PRRS in particular. It's not that producers aren't trying on this. We just have to keep trying. We have an instance where we solved an animal health problem back in 2007 with circovirus. It was a major thing. We can do that again. We've been trying for a long time on PRRS, but we certainly need to do that. And finally, price and value discovery and determination. They're an issue. This spot market on any given day can have too many loads available or not enough loads available relative to what packers need. It causes lots of volatility. I don't think it's a very good way for the industry to determine those prices. And so I think we need to come up with some answers. There's some ideas on the table. All of them have strengths and weaknesses. And probably at some point, things have to get bad enough that we decide to make a change as an industry to get that done better. Okay, that's all I have. We can take a question or two, I guess, if there are some coming in.
Steve, thank you so much. And if I could remind everyone, speakers are available for questions. If you've got a question, go to your Q&A tab at the bottom of your screen and write it in, and we will get those questions out to our speakers. We do have one to begin with, but before I give that question, speakers, thank you very much. Outstanding job, Steve, Brett, Courtney, and Clay. Really appreciate your insight and your knowledge. It was quite compelling, all of the factors that you talked about. So first question is for Brett. Do you really think that China wants to eat less pork moving forward?
That's a good question. Wants or has to, I guess. I don't know. Historically, China has been just the consummate pork consumer in the world. Before ASF, on a carcass weight basis, they were eating over 80 pounds per year. Some of the biggest pork consumers in the world. Simple math, when you lose half your herd, right? You eat a lot less pork. And that hyperinflation they had for a year and a half, almost 2 years, probably change consumption patterns. We've seen a few things happen in China. One, they are absolutely frantically scouring the world for beef. Their beef imports are going up as fast as they can find supply. They're eating more beef. Now, on a per capita basis, maybe not a lot, nowhere near what they were eating. They're eating maybe 12, 13 pounds of beef a year. Their pork was 80. Chicken is relatively stable. I think they're eating more seafood, aquaculture. I think that's something that's going to change. If we look at China and their per capita income, you could probably pattern them a little bit. I don't know if this is fair, after per capita income growth in other Asian nations like Japan or Korea. And as income grew, they adopted a more westernized diet. And so some of that traditional heavy pork consumption may change. They may eat a little less pork in the future. Really, though, in China, it's about price. And right now, pork is cheap and affordable, and I would guess they're eating quite a bit. I don't see a major trend change as long as pork's affordable and available in China. But I do see more westernization in their diets.
Thanks, Brent. Second question is for Steve. And it is, are you seeing or expecting to see PERS impact on markets this summer?
Well, PERS always impacts markets. Okay, let's say that first. The question is it going to be any worse or better than it has been in the past? I mean, it's always an impact. And last year it was pretty severe because of the 144 strain, and there's still some of that floating around. What we did have was an odd occurrence in May and June last year of a growth of PERS cases at a time of year when we normally don't have them. And I think some of that is what's kind of played into this December and January situation we've seen on supplies. If you look at the University of Minnesota data, if you look at the Iowa State data that comes out monthly, this has not been an unusual PERS year so far from the standpoint of occurrences or incidents. The problem is last year wasn't really that odd either until we got to May and June on incidents. And we don't have a good data measure of severity. And we know that 144 was more severe. Now, what normally happens in PERS years is that the next year is much better because we have a bunch of people get immune and we get we kind of get our biosecurity back up maybe where it should be. I don't know what's going to happen this year. I still think it's not good. And what we're hearing more right now is PERS impacts in grow finish buildings as opposed to sow farms. And the measurements we have from the Minnesota, for instance, is sow farms. So we kind of got a hole in our data. I don't think it's going to be a lot worse than last year, but last year was pretty bad on PERS. So I would say it'll probably have more of some impact this year as well. That should show up, though, in USDA's inventory numbers in December, whatever we had by then, and then any impact over the winter we should see in the March report with March 1 inventory. So I think PERS always has an impact. The question is it bigger or smaller in any given year?
Okay, thanks, Steve. Another question for Brent. With 50 years of GDP versus pork meat demand data, and with a high R value, why do we talk about alternative proteins?
Adam's for you, Brett. You have that, buddy.
That's a good question, right? And so those numbers are big global numbers. That's all the meat in the world. That's all the money in the world. And what it tells us is the second people get a little more money, they want to eat a little more meat. And the migration of the global middle class is incredible. And it has completely changed, I think, global agriculture and will for at least the next decade. We've seen it just in China, that Chinese middle class has ballooned, and we're seeing it around the world. Alt proteins, I don't know. I probably have a different view than most people that talk about alt proteins. And my view is in the US, 3 to 5% of Americans identify as vegan or vegetarian. That's a pretty small group. And if you look at the data, most of them can't maintain that diet for more than a year. So people try it, they're in, they're out. It's a small group. From the beginning with the alt meat companies, as we saw their stock prices go and the investment pour in, my statement was, do not confuse investor appetite with consumer appetite, right? And we were in a record high stock market. There was money everywhere, and the tech world looks and says, hey, this may disrupt an industry, throw 100 million on it. I think the data that you see today shows a different story. I think those companies, the vegetable patties, that was a vastly improved product from anything we've seen in 40 years. I think it was real easy to sell that to 3% of Americans. Go get the next 5%. I think that's a tough sell. I think the big boom in those businesses is behind them. I think they'll be here forever. I think they'll continue to nibble around the fringes, but 10 years from now, I think they're less than 3% of consumption in the U.S. Outside of the U.S., I've seen those companies. They have booths in the food shows in China. I've seen them. China's a whole different world. I mean, in the U.S., it's mostly been activism that's driven this. There's not a lot of animal activism in China, and so I don't think on a global scale it's going to get big. I think it's going to perpetually be a little niche type of product. But I don't know. Maybe I'll be proven horrifically wrong. But that's my take.
Yeah.
Hey, Bob,
right,
can I
thanks,
make
Brett.
a comment on that?
Yes, absolutely.
One point, and I agree with Brett on everything you said. I think these products are generally for non-meat eaters. Okay, so, but one point I'll make: if you look at that real per capita expenditure chart I had over the years, I mean, through all of that, one of the things that we were concerned about was all of this activism and Meatless Mondays and animal rights and things and videos of animal abuses and all those were going to hurt pork demand. They haven't. I mean, they haven't. American consumers have proven that they will buy 220 pounds of beef, pork, chicken, and turkey virtually every year as long as you bring it to them at a reasonable price. And so I think I agree with Brett. I think these are aimed at a different crowd.
Amen, brother. Hey, one last question because we're right up against our time. And I guess I'll throw this out to everyone. Question was, is there an opportunity in the African markets moving forward?
Only if they have money. I mean, that's the problem with African markets is income, in my opinion. Okay. The north half of Africa, you got a little religious problem there. The south half of Africa, you got to have some money in somebody's pockets. Brett?
Yeah, I think there will be opportunity in Africa, but I think it's going to be a slow growth market. To Steve's point, it's money, and the African story is heartbreaking. I mean, how do we help Africa? How do we fix Africa? And people have poured billions of dollars into it, and it's not relatively different. However, if you look at countries, particularly a country like Nigeria, there are 200 million people. It's now the biggest economy in Africa. They are barely able to cling by their fingertips to food self-sufficiency. There has been in the past poultry smuggled into Nigeria. Steve mentioned in his slide that Nigeria opened this little quota, this little thing for sausages. That might be a door cracking open. I think there will be opportunities. It will have to be priced right. If I look at the data today, between Europe and Brazil, they're doing some substantial business on pork into Africa. One of the other problems is most of those African countries are aligned with a conquering country. And so those countries that are under French colonization, they've aligned to the EU standard. So we just can't meet that standard and ship into those countries. And some of the other countries have aligned with Brazil. But I think poultry is the bellwether. On the great global protein ladder, I think poultry is the first rung. When you graduate from rice and beans and say, I've got enough money, you start eating chicken and you work your way up. Pork is probably the second rung on the ladder. So I think we'll see that. It's interesting. I have a son. He's actually on a 2-year mission. He's in Cote d'Ivoire, Africa. He's been there for 3 months now. And I always ask him about food and prices and what he's eating. And lately they've been eating a lot of eggs because meat is expensive and hard to get. And his egg price is the same in Cote d'Ivoire, Africa, as mine is in Preston, Idaho. Kind of surprising. And so, yeah, it just takes time. I think there is a market there, but I think it's going to take time.
Yes. So thank you very much. We're out of time. For anyone that has a question, please send those questions to us, or you can get with Steve and Brent individually to get your answers. Thanks everybody for your attendance. I'd like to leave you with one thing though, even though we're tight on time, is coming back to what Courtney said about the two actions if we could do as producers, and that would be to work on our sustainability report and our ag view. You guys don't know how much this would help us on our export markets, compete with Europe and some of the other markets that do a little bit better job than we're doing in these areas. It's critical. And so if we could leave you with anything, that's your take home assignments to do for us. So thank you very much for your time. Courtney, Clay, Brent, Steve, thank you very much. Everybody have a great day.
You bet.
We'll see you all.
Thanks, Bob.